All right, this video we are going to talk about the differences in dip buying. All coming up. Stay tuned. All right, on Friday, I should have done this over the weekend, but I'm doing it now. Better late than never. I'm going to talk about dip buying and the differences in them. So Mark right here, you can see on Friday this was a fantastic dip buy. Fantastic dip buy. This thing panicked from. Well, let's look at the daily chart first. See, daily chart. Where is it at? Yeah, 3 months, 1 day. There we go. So right here on the end. So you see this thing, it panicked pretty hard, which I guess the daily, it was already on its downtrend anyways. The 1 minute chart is right here. So this thing panicked at the open from 7:30 all the way down to the 550s. I actually seen this thing when it bottomed out, and I actually thought about buying it in the 560s. And when you have, I mean, this is a 1 minute chart, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 minutes. In about 20 minutes, this thing drops, almost $2 a share. So this is, you can think of this almost like as a rubber band. When they drop that fast, that hard, it's going to get some kind, it's like when you stretch a rubber band, and then all of a sudden when you let go of it, it comes right back. And that's what it does. It kind of slingshots and propels into this bounce. My mentor, Tim Sykes, this is one of his favorite, I think this is his favorite pattern. You got a huge panic in the morning, and then you dip buy it. I didn't pull the trigger. Don't ask me why. I am scared going long anyways, and so I didn't pull the trigger. I seen it in the 560s, 570s. I thought about pulling the trigger in the 560s and 570s, but the longer I waited, the higher it kept going, and then I just was too scared to get in. So I didn't actually take the trade, but I should have, because you can expect a 50% retracement on these. It drops $2 a share. I mean, you can expect a dollar bounce from the 550s, maybe to the 640s, 630s, and you actually overdid it. It almost went to 7, went to the 680s. So I probably would have just held right here to 6. If I would have gotten it to 620s, right? If I once you get some, if I would have got some resistance right in here, I would have got out right in this little area, or at least covered half. But that was a fantastic dip buy. I actually caught some of it today. I caught Mark today. I seen this move. It was spiking today. And then I actually pretty much top ticked it right here. I got in at 687. And I remember I almost cut losses right in here, but I didn't. I was going to hold till 7, but it never actually got through 7 because I figured 7 would be resistance. So it was right in here. I got in at 687. I guess it was right here. Right in here. Got in at 687. I was going to cut losses at 7, but never got through that 7 level, and then the rest. I actually covered at 650. I could have held longer, but I didn't. I didn't want to watch it all day, so I just took it off. So let me show you on Friday the differences in dip buying. Where I screwed up on Friday, LFIN. This one has been panicking huge on the daily chart. Look at this thing. So I was thinking on Friday, this thing was down here. I was thinking, all right, so this has got to have a bounce. But the difference is that the sell-off isn't as hard and as quick and as dramatic as it was on Mark. So if you look on, this is more of a, so whereas it took 20 minutes for Mark to drop $2 a share, and it's a $7 stock, this one, it took all day, and I tried dip buying it right in here. I tried dip buying it right in here when it started to ramp up, and then look what happens. Thankfully, I cut losses. When it broke the low right here, I got out. I made a mistake. I bought into strength instead of buying into weakness, but I did cut my loss and I got out. But the difference is this one, look how many minutes this took. This one took damn near half a day to sell off. So So if it's going to take half a day to sell off, now it could have came back and it could have bounced some, but it's not going to be as quick and dramatic. Don't, you can't expect it to bounce like Mark did, because since the panic was so much faster, the retracement's going to be a lot faster. Now this one right here, it hasn't been able to find a base at all. It sold off more today. If I would have got stubborn and held this, I would have been sad, because I would have been, instead of losing, I think I lost like $1 a share on it. Instead of losing $1 a share, I'd be down, $4 a share. So now I'm still, LFIN is still on watch, because I still think this thing is going to bounce sooner or later. We just have to wait till it goes green on the day. So I was watching it this morning. I actually traded it this morning, lost again on it. When it started to go green, on the day right over here, I bought it, but then it started to fail and I got out. So I lost $100 on it, moved on with my day, and worked out. So the difference is in dip buying. When you get those sharp, quick, fast panics, those are the ones that you want to dip buy. They are a little bit dangerous, but your retracement's going to be a lot quicker and a lot better. So I lost overall in the dip buying. I sat there and watched the mark, and I didn't pull the trigger. And then LFIN, I think I had a little FOMO. I was a little sad about missing my mark dip buy. So I went ahead and pulled the trigger on LFIN and got absolutely zero bounce whatsoever. Lost on this one on Friday. So luckily I had a nice cushion from Friday. That I was still ended up on the day. So anyways, that is my 2 cents on differences in dip buying. Something to think about and something to watch for the next time we are trading. Thanks for watching, and don't forget to subscribe.